Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks, and this is a weekly update of what's been going on with our top 3 option plays that we were looking into for this week. Now, if you haven't watched that video, pause this video right now and watch it here. I'm gonna leave a link below, leave it somewhere in the screen here. But yeah, so just make sure you check that out. And we were talking about Southwest Airlines, Alibaba, and Qualcomm. But first, if this is your first time watching this video, please make sure that you click that thumbs up button. It really helps the channel. Also subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. All right, so first up is LUV, that's Southwest, and we were fairly bullish on this stock around 52.23 coming into this week after their positive earnings win and with the amazing news with Monday's international travel ban being lifted. So it only seems right to see spikes in prices. If you take a look at the 4-hour 180-day chart, we mentioned the recent spike after reaching a low of 46.44 back towards the beginning of this month, and it looks like we were kind of starting to reach a possible peak in our uptrend with the RSI reaching 80. Now, going into this trade, we had a target entry zone of $53. Now, you'll see that we quickly did reach that target during pre-market hours, but it's always best to kind of wait and see how it's going to play out when the market actually opens. So zooming into the 5-minute, 5-day chart, right at market open Monday, there was a crossover with our EMA lines, definitely starting to signal that upcoming downtrend, and we started to see that the stock is moving below our 50-day moving average. One thing I really want to say to you guys, this is why I like to use entry target signals and goals, and then also having a set percentage where you're going to start to look to take profits and then also to cut your losses. We don't know what's going to happen, with a sea of investors, but there are certain behaviors and patterns that we can use to navigate our trades. So for instance, let's say we hit this high of 53 during pre-market on Monday, and then it continued moving upwards to 53.50. That would be a good indication for entry because it's continuing on that upward momentum from pre-market, but it didn't do that. The MACD lines fell below the center, and then looking at the ADX indicator, the DMI minus jumped past the DMI plus, showing strong signals of a sell-off. So please remember to also cut your losses quickly. So going further into the week, we've still been trading below our 50-day moving average. The MACD is still trading below the center line. I wouldn't enter a bullish position where we are right now until we kind of start to see that price move back up $50.17. And even with more travel freedoms and the recent news of Pfizer's COVID pill, a lot of analysts right now are having weak outlook on airline stocks, and they don't consider them a buy just yet. Long term though, Southwest does look like it's moving more into renewable energy sources with their fuel. So just today, Southwest announced a 15-year agreement with Velsize Renewables for sustainable aviation fuel. So that's SAF. And chemically, I'm a chemistry major, okay? Stop playing with me. But chemically, it's very similar to traditional fossil jet fuel, but using sustainable aviation fuel reduces carbon emissions up to 80% over the life cycle of the fuel used today. Now, with this venture, they're projected to bring in a revenue of $3 billion when it starts to get into the works. So with the new infrastructure bill in place, this could really be very lucrative long-term for Southwest and, just to help the environment in general, okay? So shouts out to Southwest for that. The next stock was BABA, Alibaba, and right now this stock is really playing in my face. Now, I'm still overall bearish on this stock. So when we were looking at it, originally Alibaba was trading around 158.73, and we had a far out of the money December put. Just like the previous stock, we had an entry signal zone for the stock to fall to at least 156. So on market open on Monday, you'll see that the stock literally skyrocketed to 163, and it's been slowly moving up throughout the week. Tuesday seemed fairly neutral, and coming into today at market open Wednesday, we climbed up to 166. Now, with any high volume stock like this in a strong trend, then there's definitely going to be some pullbacks, whether in an uptrend or a downtrend. And that's something that we're kind of seeing right now with the slight spikes in price, but ultimately it's still in a downtrend. Now, it was trading at 182 almost 2 weeks ago. So that's just kind of some context of the overall movement of the stock. So what's really causing the rise in Alibaba's price right now, even with crackdowns in Beijing around the online monopoly? Well, today, Alibaba is in the final final hours of their Singles Day shopping event. So I don't know if you've heard about this. It's just this really big popular day. They're selling a lot of stuff. They actually sell more goods than Black Friday and Cyber Monday put together. So they even have houses that are sold at discount prices around the Singles Day. So last year it brought in $74 billion worth of orders, and it's expected to surpass that this year. So that could also be a very lucrative catalyst to why the shares are increasing around this time. Alibaba's shares were up 11% in October alone, and it seems to be getting a lot of support on Reddit's Wall Street Bets forum. I don't know if you guys are familiar with that, but they're very well known for pumping and dumping meme stocks like AMC, GameStop, and causing a lot of short squeezes. So is Alibaba considered a meme stock right now? Back on October 7th, it jumped 8% alone that day because of talk on Wall Street Bets. And normally they focus on cheaper stocks to pump and dump, but Alibaba shares are so cheap right now, it really looks like a steal to manipulate their prices. Alibaba's 52-week high is $280. So like we said, it's down almost 50% right now, and this doesn't have anything to do with their business model or what they're doing, sales or anything like that. This is literally just from people, you know, from popularity and how it's trading right now and being mentioned on these forums. This is what a lot of people would classify as market manipulation, which will usually go against the overall trend. Now remember, they do have an earnings report coming up on the 18th of this month, and that's going to kind of shed some light on where the business is planning to move in the future. But as far as an entry for a put position right now, even with the overall downtrend, like I said, I would still keep my original entry around 156, 157 right now before I got into that. And the last stock that we were looking into for options was QCOM, that's Qualcomm Inc. And we were bullish on this stock around 163.03. Now we had an entry target around 164.50 and a profit zone around 168 plus. So now initially we had some great movement on market open on Monday. It reached a high of 166 towards the end of the day, and it continued in that strong uptrend into Tuesday, peaking at 169.52. But you'll see that it slowly made its way down to close around 166 on yesterday, and then come market open today on Wednesday, you know, looks like it's kind of tanking. It's not doing as well, and it's down to 161.20 at the time of this recording. And so this is just another reason why with these high volume plays to take your profits. So I did have a position open on QCOM, and I exited when it was around 167 on Tuesday, so close to when it kind of started to taper off. So it's definitely helpful to have a target profit percentage around maybe 30 to 50%. We were originally really getting into the position to benefit from the strong uptrend that we saw in the stock following their earnings. Their earnings beat around the 3rd of November, and then after such a strong move upwards, you'll definitely kind of start to see a healthy pullback. Now keep this in mind, the semiconductor sector is up 7% alone in the last 5 days in total. And we mentioned in the video on Sunday that QCOM is moving towards, you know, expanding their business with so many companies manufacturing their own chips and relying less on third-party vendors like QCOM, Intel, AMD, and things like that. So they're trying to build their business up in other areas to, you know, kind of offset that. Another sign of long-term growth is the US government's efforts to help secure the global semiconductor supply chain. And this shortage is literally one of the most urgent issues that the US government is, you know, facing right now. So it's definitely going to continue to get a lot of good attention. So going forward with QCOM, it definitely looks like a good long-term position. And a short move down could be considered a normal correction with 10% drop or less from the previous high. So if you're still looking to get into this position, I would wait to see the price reach its recent resistance around 167 as an indication that it's continuing in that uptrend after positive earnings. And you know, that's just the criteria that I would have to get into that trade. It's as simple as that. And yeah, let's just continue to take a look at these stocks, see how they're performing throughout the rest of the week. And you know, that's pretty much all we can do. All right, you guys, but make sure that you check out this video with more details on doing option spreads, credit spreads, okay? So they can be a lot less risky and generate easy passive income. So make sure you check out this video on credit spreads and expect to see the magic of iron condors coming soon. So I'll have that video out to you guys very soon. So just make sure you check this video out. All right. Yeah.